All right, StockPulse on location. StockPulse Silver Symposium year 2 over here at Airway Heights, just outside of Spokane. Got Jack Gamble here from Nobody Special Finance here. Jack, I appreciate you making the trip here all the way from Pennsylvania to be at our event. Thank you.
Thank you very much for having me. It's been great coming out here.
Yeah, so I guess give the audience here a little perspective from your point of view on how things are going.
So I'm somewhat new to the mining space. You know, I've been a shareholder in some junior miners over the years, but when it comes to the devil in the details of mining and ore deposits and exploration, and it's been just drinking from the fire hose, if you will, as far as geology. I learned more about geology in the last 2 days and sulfides and deposits and vein patterns than I have in my whole life. So it's amazing the level of detail and the amount of expertise that's here. It's been a real pleasure to learn from these folks.
Yeah, no, you've been doing some educating yourself here, but yeah, a lot of analysts, a lot of experts, a lot of mining companies, a lot of years of blood, sweat, and tears here. Silver's a little down right now.
Yep.
And maybe give us a little see how Jack Gamble sees silver.
So I'm a big fan of silver. You know, I like the shiny, as I like to say. It is my favorite of the shiny metals, and it's been a tough time. My channel was born out of the silver squeeze movement. I got my start in the Reddit Wall Street Silver group. I made a couple of just short rants about inflation and things like that, and they were well received. That's where my channel came from. I don't cover explicitly silver or exclusively silver. I talk about, you know, just about everything in macroeconomics, finance, but I always have a soft spot in my heart for silver because that's where I got my start. So it is a tough time watching the price is down, but I think really it's being dragged down by other asset classes right now. You know, we're in a bear market in stocks. Things aren't going well really anywhere. And, you know, I've gone back and studied a lot of previous bear markets going all the way back to the 1970s, and silver does historically go down during times like this, but it tends to do better than other assets. It tends to outperform the S&P 500. Really, the only time silver ever did worse in a bear market than other assets was 1980, 1982, the Paul Volcker days when he was raising interest rates like a madman. So I'm expecting lower prices probably for the foreseeable future, but I'm also expecting a hard and fast bounce when we do find a bottom. I think gold and to an extent silver, they're going to be the first to rally off of the bottom. So I plan on being well positioned when that happens.
Yeah, why don't you run through your model here, Nobody Special Finance, quite a name here.
Yeah, I call myself Nobody Special. Again, that comes back from the Reddit days on Wall Street Silver because my background's not in finance. My background is engineering. I was an engineer. I worked in nuclear power for 15 years. I was a systems engineer, and it was my job to study charts all day and look at performance data and try to figure out equipment that was going to break or figure out what was the next thing that was going to go wrong before it went wrong, because in nuclear power, we don't like to wait until things break to fix them. Obviously, we like to fix them before that happens. If you live near a nuclear plant, you'd probably be happy to hear that. So along the way, I developed kind of a nose for things about to go wrong. And, you know, if you're looking at charts that are showing you pounds per square inch or gallons per minute flow out of a pump, or if you're looking at a chart of yields on the 10-year treasury, you're looking for patterns and you're looking for things that are about to change and go wrong. So it's translated to the world of finance pretty easily. And, you know, I call myself Nobody Special to communicate that, hey, I don't have a background in finance. I wasn't a trader at a Wall Street firm. It's also a way to keep myself in check and not take myself too seriously. But at the same time, I don't think you need that. The financial system, the financial services industry, and the financial press, they've kind of convinced the public that this is too hard for them. You wouldn't understand this stuff. Just send your money to these guys for a percentage and they'll manage it and do a good job for you. And they tend to use big fancy terms and acronyms that people don't understand to make themselves seem more intelligent and more useful than they really are. And really what it boils down to is most people in the financial services industry are salesmen. Then they make money based on how well they can convince you to part with your money and turn it over to them. That's how they're compensated, not based on their performance and how much of a return that they make for you. So I kind of set out on the mission to make those terms and those phrases more understandable, because it's not hard. It's a lot of things to learn, but once you learn a couple of key phrases and a couple of key relationships, like the relationship between interest rates and metal prices and things like that, once you get these things down, this really isn't that hard. And you don't need to spend all day studying charts and all day reading earnings reports to manage your money well. And you also don't need to pay those ungodly fees that some of the services companies will charge you for that. So that's kind of the niche that I'm hoping to fill in with my channel.
So what appeals to you about silver the most?
What's there not to like about silver? You know, I've told this story a couple of times over the last few days. I'll tell you about my girls. I have 2 young daughters, and they're hard workers. They like to earn money. You know, they like to save up for their toys and things. So I have a system in my place where my girls earn money. I make them spend half of the money they earn on silver. Right? It goes into their little stack. They're 10, they're 6, and they have a stack.
Never too early to be a stacker, huh?
So I'm teaching them savings, but at the same time, their savings is not being looted by inflation while it sits in a bank account or in a piggy bank, right? Our model when we were kids of putting your money in the piggy bank, that doesn't work anymore because it's dying a slow death when it's there. So I'm teaching them about inflation hedges. I'm also teaching them an important lesson that someone is going to come along and take half of what you produce later in life, you know, basically teaching them to hate taxes. Even though it's going into a savings for them, they'll get it back in the long run, but they're getting used to the fact that, hey, I just earned this and somebody just took a third of it or a half of it away. So I really like using silver as a method for teaching financial literacy to my daughters. I think it's a great investment. I think it's a great inflation hedge. I do think it is drastically undervalued right now, and I think it's going lower. I think it's a generational buying opportunity because silver has kind of lost its way as a monetary metal. It's viewed mainly as an industrial metal by a lot of people. We took the silver out of the money, God, almost 60 years ago now is when silver came out of money, and most people own none of it. No silver, no gold. You know, they treat it like a pet rock, like it's ancient and we don't need it anymore. And I think that's going to change over the next few years because the financial system is starting to show cracks. Most people don't really trust banks, at least they'll tell you they don't trust banks, but through their actions, they're still trusting the financial system, still controls most of their wealth. And I'm not so sure that's going to hold up over the next couple of years because I'm starting to see cracks forming in Asia, in China. I'm starting to see them forming in Europe, certainly here with interest rates raising. So I would not be surprised to see silver make a comeback in a mainstream way as a monetary metal again. And when that happens, the stackers will be rewarded for their patience when we get there.
Before I let you go here, talk about China a little bit. I know you openly talk about that, and you've been doing a lot of talking here at our symposium too, so certainly appreciate the vibe.
Thank you. China, put plainly, I think it is the largest asset bubble in history. I think it's bigger than the housing bubble here in the States before the global financial crisis, bigger than tulips, both in nominal dollar value terms and as a percentage of GDP of a global economic superpower. And it's reached such unbelievable proportions. You know, just to put it in perspective, in Los Angeles here in the States, the median house costs 13 times the median household income. And most people would argue that California is in a housing bubble at 13 times that median household income. In Beijing, the median house is 55 times the median household income. You have to work 55 years to own a modest home in Beijing. I mean, it is head and shoulders.
Back when our parents.
That's right. 3, 7 if you were very wealthy. 55 times the median salary, and without going
too much into the details,
it is a bubble within a bubble, and really it. Without going into too much detail, it traces back to the one-child policy. The one-child policy has created such an imbalance between men and women in China that your only hope of marriage and of having a family is home ownership. Because there are 35 million more men than women in China now, the competition is incredibly tight. And if you don't own a home, you're not going to have children, you're not going to get married. And so families have become desperate to achieve home ownership because it's their only hope of a future for their family. So it's not a place to live. It's not a speculative investment because numbers go up like it was in 2008. It is desperation for a future. And that will only last so long as families are willing to pool the combined wealth of the entire family. So young Jack has a chance of getting married and having kids, and that's already starting to fail there. So when that happens, this insatiable growth engine in China will shut down. And China has consumed 55% of the copper in the world for the last 30 years. And 45% of all the steel in the world has gone to China to build these cities that nobody lives in. And when that stops, well, about 60% of the silver comes out of the ground, comes from copper mines, and comes from lead and zinc mines. And if there's no more demand for that copper and that lead and zinc, that silver is going to stop coming out of the ground. So a lot of these miners here at Silver Symposium, these are dedicated silver mines they're not digging up copper, but also finding silver. They're digging for the silver itself. So I think a lot of these companies will be perfectly positioned to capitalize on a drastic reduction of the silver supply coming out of the ground as the Chinese housing market collapses.
Put you on the spot real quick. When do you see this unfolding?
It's already started. The first small village banks have already started to fail. It's very hard to guess when. If I could tell you exactly when, I'd probably be a billionaire by now. My guess is within 2 to 3 years, we will see probably depression, not just recession in China.
What's the best way to follow you, Jack?
You can follow me at Nobody Special Finance on YouTube, and I'm also on Twitter. I'm JG Nuke on Twitter. I'm on Reddit, also JG Nuke, and that's where you can find me.
Jack Gamble, appreciate your time. Silver Symposium here. Nobody Special Finance. Thanks for joining us, Jack.
Thanks for having me. It's been a real pleasure.
Absolutely.
Yeah.